You've only got 4 days left before the EDGEFINDER doubles in price and is no longer 50% off. The EDGEFINDER is a trading software tool that traders around the world are using to find better trade setups right now, using things like the Smart Money Tracker, which reflects the COT reports, retail sentiment. It also tracks seasonal trends for traders who are looking to take advantage of seasonality, and it creates a watch list each and every day for traders that use this from all over the world. People in North America, in parts of Africa and Asia and Europe are all using the EDGEFINDER to build better data-backed trading setups. If you've been watching the channel for a while and you're familiar with our software, then I want to let you know that our half-off sale is ending soon and I don't want you to miss out. If you would like to get more information about the software, make sure to message us right now using the link that is down below. You'll be connected directly to someone on our team to ask them about the half-off sale. But wait, it gets better. If you direct message us, it's 55% off. You get an extra 5% off just by messaging someone on our team who can connect you to the tool, get you set up, and if you'd like, you can set up a call to go over the software if that would be helpful to you. We want to make sure this software is a right fit for you. We're not just trying to sell this to anybody, and we'd like to connect and get to know you before we sell you the software. So again, click that link and let us know that you're interested in the half-off sale before it ends. And remember, 55% is available if you do direct message us now. We've been talking about gold here. Gold is on our watch list. Gold is getting a buy rating on our software. For the big point here, basically, we took a look at COT report data here to start out the week yesterday, and I've still got it pulled up. Gold continues to be one of the most bought things by professional money managers and hedge funds and things like that. They're very long gold. So I really like gold buys here if I can find opportunities to do so. Better yet, guys, I want to show you something. If you're focused specifically on gold, do me a quick favor. If you are a gold person in the chat, type yes or type I am or me. I don't know. Gold traders in the audience, let yourself be heard. Let us know that you are, of course, a gold trader if you're somebody who's interested in it. I want to show you while you do that, take a look at the commodities on the retail positioning, guys. And what we see here, this is actually increased. It does seem like retail traders have been picking up more and more long exposure. Short exposure on the gold market, while hedge funds and professional money managers are more on the long side of gold. Now, does that guarantee that in the next 15 minutes, gold is going to go up? Absolutely not, right? That does not guarantee anything. But positioning and sentiment analysis specifically, we call it SA on the channel. If you're a regular, you know what's up. We call this SA, sentiment analysis. We take a look at what retail is doing. We take a look at what hedge funds are doing, and we trade accordingly. Of course, it's not a signal by itself, but it can be a nice confluence factor to use that goes beyond just technical charting. So again, 74% of retail traders are short, and a large component of hedge funds have long exposure to the gold market. So I am looking to be, more interested on the long side of gold. We are just a few minutes out here. We've got just over a minute to go before the news comes out. Again, we are looking out for retail sales numbers. I'm going to set up my chart so that we can watch the reaction to this potential spike that may occur here in the market. So I've got gold in the top left, guys. I've got the NASDAQ bottom left. I'm going to go, we'll go euro. Actually, you know what? We'll do USD CAD today, as we do have Canada printing their CPI number as well here this morning. And let's do one more here, top right. So we've got gold, NAS. Let's go ahead and just do dollar index here. See how that prints. So 15-minute charts all around, guys. We're about 30 seconds out from the news. We're going to react here to see what we get, make sure everything is set up so we can watch it. See if gold pops, if gold falls apart, we'll watch that. And of course, trade setups will follow. So don't go anywhere. And quick little break here. We're going to do breaking news here, and we're going to watch the reaction. All right, let's take a look here and see what we get for retail sales, whether we get a spike here or not. All right, retail sales numbers should be in, and there goes dollar CAD. Something must have happened with the CAD there, because the CAD had a big reaction. Gold moving slightly higher, NAS slightly higher as well. DXY seeing a little bit of a decline here. Gold making a push. There goes NAS and gold. Again, these are 15-minute charts, so these are not necessarily massive moves here, but for day traders, that's a good push to the upside. Gold trading 1970, NASDAQ 15,700, printing, DXY breaking the seal back under 99.6 right now. Big sell-off on the dollar, I would say. That's a good move. USD CAD made some gains, but giving it back as the dollar does seem to have declined at the very same time that the Canadian dollar took a bit of a hit. So perhaps CPI numbers in Canada were weaker. Let's go double check our theory there. We'll go back to Forex Factory, pull up today's latest numbers. Again, core retail sales should be coming in. Retail sales coming out for the US as just worse than expected. Gold pumping a little bit off of this number. As well, they're kind of a bit of a mixed reaction there. CPI came out for Canada as a little bit hotter than expected, but CPI month over month down to 0.1% compared to the forecasted 0.3%. Very interesting there. So a bit of a wash for the CAD news. DXY down here, but regaining a little bit of its strength. NAS popped and then came back a little bit. Same with gold. Gold popped up to 1971. Now trading back to 1966, 1960. Yeah, wow. A bit of a reaction there, just intracandle. Dollar regaining some of its strength. Let's see, I think for the most part, that's pretty much all the numbers in. Core retail sales came out less than expected. U.S. retail sales month over month came out less than expected. These are signs of potentially some slowdown in the economy. And of course, when that happens, that's going to cause some weakness in the dollar. But that weakness in the dollar was quickly recaptured.
Looking at CPI, I think CAD has too many CPIs because I don't really know what to look at.
That's so confusing.
So they had a cooler number month over month, but then median trimmed common is all hotter than expected. Core is not out yet, I guess, unless you got numbers for that.
I think that there might be I think maybe that's their trimmed. Hold on, change it. Yeah, excluding the most volatile 40%. So their trimmed CPI is their core, I guess.
Okay, so I guess mixed numbers. I don't know what BOC exactly is looking at, because if it's the same as the Fed, then core is as equally as important or more. So maybe this suggests, I don't know, maybe they want to stay where they're at for now, but it's kind of tough to tell. Gold seems mixed about it too. Had a quick pop and then came back, and now is that the 4-hour chart. So that long wick just shows a lot of rejection. I'm still holding at 1951. I don't think I'm going to trail my stops yet until we see sort of like a bottoming on this chart, but I'm afraid that it's hit this level and kind of topped out for now. But if it establishes a bottom, I'd like to trail underneath it if it doesn't come back to my entry. But kind of a weird situation for gold, I guess, and CAD. And then on top of that, where we have retail sales today, and lower. So lower than expected is probably good, I would say. That means, I guess, less spending overall in the US, less sales. And that's kind of what the Fed wants. They don't want prices to go up. They want spending to go down. So maybe that is probably going to tie into sentiment today on the indices. Maybe it's good. But on top of that, we have not indices. We have earnings coming up for the indices. And those are some big ones. I think Tesla is today, so that and big banks. So a lot of stuff going on.
Yeah, that's definitely potentially market moving there for sure. I do think that, retail sales is an interesting one because, retail sales being down shows, of course, like consumers are out and they're spending less, or they're less willing to purchase things, maybe going to the mall less, or I don't know, things like that. on one hand, that potentially is kind of like strong for gold, I guess, because in one respect it's like, okay, maybe some concerns about the economy slowing down, but at the other point it's kind of like you mentioned, if the Fed is kind of wanting that to happen, they're kind of wanting things to continue to move in that direction, it kind of cancels out a little bit. Despite that though, we did see an initial pop up on gold. I mentioned, Frank, that I'm looking at on gold, the way this candle closes. This is a 4-hour candle that closes in about 17 minutes now, 18 minutes now. This is just, if it closes red, I'm not necessarily like bearish by any means, but I probably just myself, I've been looking for a gold trade. I'll probably just wait because, again, that huge rejection at a level of resistance like this keeps me a little bit hesitant. But I do overall still think gold looks bullish. I'm just very interested to see how this candle closes. You mentioned indices. S&P and NASDAQ are for me still a little bit of a ways away from an entry. They do look very strong, and I am a buyer, but I've got to see pullbacks. Would you agree on S&P and NAS, or do you have any shorter term stuff you're looking at?
I would go on the daily chart and take a look, but it kind of broke my thesis yesterday. So Friday's close for both NAS and SPX was this bearish inverted hammer right here, or pin bar, whatever you want to call it. And then it went up and made a higher high. And then today is, I guess, a little bit lower. So I'm not really sure on the technical side, but I would like to see a pullback if we get one towards like 4400s, 4450.
Yep.
Something on a larger time frame instead of trying to pick and choose on the hourly or lower. But yeah, they don't give you too many opportunities in the indices for a pullback. So I definitely understand trying to take a long trade on shorter time frames. But I don't know, it does look like it wants to complete its move down to this level and maybe test some support.
Yeah, no, I agree. I definitely like the indices, but similar to yourself, I've got that same level marked up, 4450, let's call it, would probably be my starting, attempt to go long again, indices or specifically, of course, S&P 500 here.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.